The broadcast is now starting. All attendees are in listen-only mode.
Hi, good afternoon, everyone. This is Sharon Ryan in the Alumni Office at William Patterson University, and I want to welcome you to our webinar, Buying a Home in 2020, presented by Kathi Verbeek and Stephen Saladino. It's a new year, and maybe this is the year you're planning to purchase your first home, or maybe you're going to move from your present home to a new one. So whether you're downsizing or moving on up, this is the time to learn about current market trends, key components of the buying process, and the top reasons to buy in 2020. Our presenters today know that buying a home is one of life's biggest decisions, and they're here to help out and answer any questions you may have about buying a home this year. So before I introduce today's presenters, I'd like to go over how the webinar works for those of you who haven't attended in the past. First of all, you should be able to see the presentation on your computer screen. Hopefully you can hear me through your computer's audio system. Please feel free to ask questions by typing them in on your dashboard. We are going to be monitoring your questions and we'll answer them at the end of the webinar or, if possible, during the presentation. We know a lot of you are on lunch, so we want to make sure we get through the meat of the presentation first. Any questions that are not answered in today's webinar will be addressed after the webinar is completed. So once again, feel free to type in questions as the webinar progresses, and we can give those questions to our presenters after. So now I'd like to introduce today's topic and speakers. Kathi Verbeek is part of the Keller Williams Town Life team in Tenafly, New Jersey. She joined Keller Williams after an extensive and successful business career as a senior executive in major operations in New York City. Kathi has also been a guest speaker for the Successful Business and Professional Communications class at William Patterson. Kathy's married to a WP alumnus, Bob Verbeek, class of '95, and resides in Leonia, in the home her parents built for their family. Stephen Saladino is a mortgage advisor with Bond Street Mortgage, LLC. Stephen is an expert in mortgage financing and can help you buy, sell, refinance, or build your dream home. And now I would like to introduce our presenters, Kathi Verbeek and Stephen Saladino.
Thank you, Sharon. We so appreciate the time today to be with all of you. What we thought we would do is start off a little bit about a little deeper dive on our backgrounds, and then we'll get into the bulk of our conversation on real estate and home buying today. So Sharon has shared with you a little bit about my career and my background, and what really has made it an opportunity for me in terms of going into real estate after being in the corporate world is that I spent most of my time as a consultant, which meant that I was helping people either guide them to answer questions and make the right decisions, solve problems, and provide solutions. And that made it a very easy transition into real estate, because when you are buying a home, you are looking to have someone who can guide you through the process. Excuse me. I chose Keller Williams Town Life and the Keller Williams Corporation because it is a company that is #1 in real estate. It's not only here in northern New Jersey, it actually is across the country, and it is also an international company. Working with myself as an agent or other agents within our company, what that does is it not only gives you the ability to work with me directly, but we have a team approach, and so I have a lot of resource at my fingertips that can really help us get you the right answers to get the job done. And if you're working outside of New Jersey and looking to buy a home, we also have a referral program. So there's a lot of opportunity here. I'd like to now turn it over to Steve to give you a little bit more about his background.
Good afternoon, everyone. Thank you so much for having me. So my name is Stephen Saladino. I am with Bond Street Mortgage in Paramus, New Jersey. We are a mortgage bank. And so kind of the difference between like a mortgage bank and a mortgage broker is that we fund the transaction, and we also control the transaction from start to finish. All the underwriting and processing is done in our house. I have a team that I work with on every file. we're constantly keeping the other professionals involved and the client involved in the transaction and keeping everyone updated. So I really couldn't do what I do without my team. I think that's a very good foundation that I have there, and we are a family. So the people that I do work with, we also work on a team approach, and these are people that I trust everything with them. So I'm very happy where I am, and we are also licensed in 16 states as well, besides New Jersey. So if you are looking to purchase in New Jersey or outside of New Jersey, we can certainly help you there. A little bit about me. So I grew up in Elmwood Park, constantly playing sports, which definitely shaped a lot of my values and my work ethic. And now I actually coach football myself. So in Elmwood Park, where I grew up, just giving back to the community a little bit, and kind of being able to rear some kids into the right direction and start their education early. And I kind of take that same approach in my business as well. So when I first got into the mortgage business, it was right after I purchased my first home. And the loan officer that I had worked with came to my home. He sat down with me. We went over everything from what I, spend on milk to vacations, my lifestyle, and made sure that he was going to put me in somewhere where I was very comfortable and able to grow. And so that's kind of what inspired me to help others in the mortgage industry. I was a mechanic for about 10 years. So also problem solving, comes from problem solving. So it was a very easy transition for me as well into this business.
Great, thank you, Stephen. Okay, so what we'd like to do is we do like to engage our audience. So we have a question for you. And so our first question, and we're going to ask you if you can type your answer into the question section. Do you rent or own a home now?
So we're going to give you a couple of seconds to type in your answers here. And then we're going to, okay, here they're coming. Oh, number one, he rents. See what people are doing. Oh, some people are still living with their parents, but looking to move out and buy. We have another rent. So, we have a lot of people renting and still living at home. That's it. Oh, rent all the way down.
Well, thank you very much. That's great.
So
that's great.
There's a lot of renters and people still living at home, but want to move out and buy first thing, looks like. So, okay.
Terrific. Thank you for sharing that with us. Okay. All right. Then let's move forward. All right. So as Sharon said, in our agenda, you can see on the screen here, these are the key topics that we're going to cover today. And our intention is to hopefully provide you with a lot of information that then sparks the ability for you to ask further questions and to see how we can help you here. So I'm going to dive into current market trends. We're going to talk a little bit about the benefits of renting versus buying. We're going to talk about the process, and then who are your key partners and why now in 2020 it's a good reason to buy. And then we are going to open it up in the end for Q&A. So as Sharon said earlier, please make sure that you type in questions for later, and we'll happy to answer them. Okay, so what I wanted to start with is a little bit about what's happening in the market. And what I did was I pulled some statistics from 2019. The first slide is going to talk briefly about single family homes, and then the second slide is going to go into condominiums and townhomes. So let me put some numbers up here for you. And I promise I won't bore you with going through all the details of the number, but I want to point a few things out to you. And so the first thing is you can notice at the bottom of the screen, you can notice at the bottom of the screen that I've looked at, we have a total northern New Jersey, and these numbers are coming from the multiple listing service. So those are all the homes that are listed out there. And what this says is that overall in North Jersey in 2019, sales were up in terms of the number of homes sold. And the medium house, that's actually should be medium price. The price was slightly down from the year before, and houses are taking about 59 days to go from listing to offer. So I just want to also mention a couple of things in terms of definitions, because some of these terms are probably new for you. So the first thing is you're going to notice on here that and let's use Bergen County as the example. You can see here that I'm listing a median price of a little under $500,000. And so I just want to give the definition of median price. And so what that means is median means in the middle. And so it means that there's actually, approximately 50% of the homes sold at a higher price and 50% of the homes sold at a lower price. So the median is 498, and that's slightly up from the year before. And you can see here then, and sales in Bergen were up this year on single family homes. And then you can see here for Hudson County and Passaic County and Morris County, sales were down, prices slightly up. And you'll notice that really days on market are all about the same in terms of it's taking about 2 months going from seeing a home to actually making an offer being accepted on it. And so what I would say to you is days on market, and this is something as a buyer, as we go out as agents and help you find the right home, is that this actually is days on market is often used as a thermometer. And as a thermometer, what it does is help us to gauge the temperature of the housing market. What we're seeing now, or these are annual results, what we're seeing right now, and of course we're transitioning into spring market, is that you can see the difference in days on market based on higher priced home and lower priced homes. The sweet spot where homes are selling faster are in those price ranges when you're talking about the $300,000, the $400,000, the $500,000 homes. You may have heard that those $1 million homes are taking a lot longer to sell. And that goes all into determining what the temperature of the market is. On this next slide, what it's showing you are the condominiums and townhomes. And again, we're looking at it in the same way. And you can see here that, again, Bergen County has been pretty steady as far as sales up, whether it's condominiums or whether it is our townhomes or single family homes. And is in line with total northern New Jersey. Again, we're seeing some things happening in Hudson, Passaic, and Morris, where sales are slightly down, and actually median prices are slightly down outside of Passaic, which actually has seen a rise, but you can also see there that the median is at $274,000, which means there is certainly affordable housing in Passaic. And one of the things that we would do is that's something we would talk about. And during our talk today, Steve and I will talk about, how you can define what your buying power is and what type of price range that you could afford as you look to go from renting to buying. So I wanted to share a few fun facts with you. And those fun facts. So the first thing is that are these from 2019, and these numbers are coming from NARS. NARS is the National Association of Realtors. So you can see here, this is the buyer background. 33% of buyers are first-time home buyers. 89% purchased through a real estate agent, and 29% have desired a home of their own. And it sounds like perhaps many of you on this call, that's something that's on your radar for 2020 or so. Next category, working with a realtor. 52% did find that a realtor was extremely helpful in finding a home. Quite often, a realtor is being referred by a family member, friend, or coworker. That's at 41%, and that they're highly satisfied that buyers that have used an agent, that 90% would use their agent again or refer that agent. Finding a home. So not surprisingly, and although I did find 44% seemed a little low to me, buyers' first step is to do online research. So they're saying that's 44%. 87% engaged the real estate agent as a useful resource, and it took about 10 weeks to preview and to look at about 10 homes. What I will tell you, that one of the statistics I didn't put on here, but I want to share with you, is that after a couple of weeks of looking online and doing some work on their own, most buyers did then engage a realtor, because what that does is that window of time, those 10 weeks, did shorten and was more productive and time saving for the buyer, because you were able to focus on what your needs are, and the agent was able to identify and really cull down and prioritize the homes they were showing you. And then it sounds like we have a lot of aspiring buyers on the call today. So, you know, this is the first thing, that 57% of our aspiring buyers said they believe financially they cannot be homeowners right now. And hopefully we'll dispel some of those myths, because that's an assumption. It doesn't mean it's your reality, and it's worth having those conversations to really see what your opportunity is. 78% believe being a homeowner is a good financial decision, and 75% believe homeownership is still part of the American dream. Okay, I'm going to turn it over to Steve to talk about the top reasons to buy in 2020.
All right. So, as most of you know, the market is doing very well right now as far as our economy goes. You know, people, you know, weekly earnings are up, hourly wages are up, unemployment is very low. You know, so we've seen a good amount of wage growth in recent years, and there's also a very good builder confidence right now. So there is a lot of new construction being done to kind of fill the void of the lack of inventory that we have faced over the last 5 to 7 years. So now, and also, you know, interest rates are very low, so you do have a lot more buying power right now. If some of you, you know, maybe have asked your parents the first time they bought a house, you know, interest rates were maybe at 10-12%, and you know, right now a mortgage is the cheapest money you can borrow. We are right in the mid 3% depending on, you know, where you qualify, but a mortgage is definitely, you know, you have a lot of buying power at this present moment. And the Fed has continued to say that they will keep interest rates low for the near future as well. All right, so you really want to find out, you know, what's driving you to buy a home. You know, if you're even ready to buy a home, we need to find out if it's right for you. You know, do you plan on, you know, changing locations soon? What's your lifestyle like? You know, is your family going to be growing? Are you going to be downsizing? So these are all things that you should think about when you're, you know, looking to purchase a home or not. And so, you know, my main objective when I first sit down with a client is to really dig in and, you know, find out everything about their life and their career and their family, and, you know, really trying to put them in the most comfortable situation so that they can grow.
Steve, can I ask you, before we move forward, can you just talk a little bit for a moment about the interest rates? And they have been low this year.
Yes.
So we originally weren't sure about that. They turned out to be low. That's been very positive for us.
Yes.
What do we see right now? And I know we don't have a crystal ball, but what's our feeling in terms of what's happening with interest rates right now?
We are you know, we are right at the bottom. You know, it's sad to say, with some of the things that have been going on globally with viruses and things of that nature, you know, that does affect the market, even though it's overseas. So, you know, the market has been right around the bottom right now, but the Fed has met and said that they are going to, you know, keep rates. They're not going to make any adjustments. You're still going to have your daily and hourly adjustments that happen. You know, there's always corrections throughout the day with the market and what's going on with stocks and bonds and things like that. But you know, I mean, we are at an all-time low right now. You know, very close to what rates were in 2016, which was kind of the bottom there. So, you know, like I said, I for the near future, I would say for this year at least, I would say interest rates are going to stay, you know, below 4% or even around 4% if there's any movement up. But this is definitely the bottom. And
so, you know, that is great news in terms of the interest rates continuing to stay low. And one thing that I just want to share with you, so what happens is that we all know that we have a certain amount of money that we're going to be able to spend on a home. It's no differently than in your checkbook. You know, you have a certain amount of money in your checkbook to buy the different things. And so when interest rates go up, and if they even go up by a point, what happens is that reduces your buying power. Because at the end of the day, if you really only have $100 to spend, it's either going to go into the interest bucket or it's going to go into the purchase of the home. And so by keeping them low, you actually are getting more for your money then in terms of the type of home that you can buy.
Correct.
Okay, so we're going to move forward then. Thank you, Stephen. And what we want to do is segue into talking about should you rent or buy? And we know this is one of the biggest financial and emotional decisions that any one of us can make. And really only you can decide what's right for you and for your life and for what your goals are. So let's take you through some pros and cons of what that looks like as you think about it. And again, I know based on our audience today, we have a lot of renters out there, or we have people that perhaps are maybe still being at home, but are ready to go into the next part of their life. Only you can decide where you are on this journey. And our jobs here are to guide you and to get you to the best decision for your personal goals. Okay, so for renting, and I'm sure most of these aren't going to be a surprise to you, but with renting, because you are paying by month, you typically have more flexibility to move. There's a sense of community. You could be part of a community where there's amenities, and it could be a pool, it could be the gym, it could be that they do block parties, etc. And so you're not alone. The owner is responsible for maintenance. Those headaches when something breaks, you're not the one that has to deal with it. And you don't have to deal with property taxes. So those are, all positive things for you. And it also gives you the ability to save a little money, if you will, if you're at the cusp of deciding that you eventually want to buy. Perhaps you keep a little money in your pocket. And again, based on individual situation. On the con side, there's limited privacy. I'm sure many of you know that from your current situations. You've got neighbors, there could be thin walls, and you have to take that in consideration. You have to live by the owner's rules. There's no tax deduction for rent, and there's no control over rent increases. You don't have the ability to personalize your home from hard renovations. You certainly can do the cosmetic things to it, drapes and things like that, and decor, but you're not able to do renovations. You do have to, there's moving costs, and you have no equity in your home. Now let's go on to the buying side, and I'll be honest with you, perhaps I skewed the deck here a little bit because I'm going to start off with cons on this one. So on cons, there are upfront costs. There's a deposit that you're going to have to be saved for to be able to go in to buy something. Once you own a home, you are responsible for maintenance. Moving becomes more involved. It's not impossible, but it becomes more involved. And so it's a much more serious decision. Interest paid up front. Before you pay the principal. So when you're paying, what happens is when you're paying your mortgage, you're going to see those payments where it's going to show more of it's going into the interest bucket than the principal bucket, so that it will take there is a time period of when you actually have equity in your home, and we're going to do a deeper dive on that. On a pro side, personalization, that's from the cosmetic to the renovation. You have the ability to make your home your own. Privacy. You're on your own property, and you can be as neighborly or unneighborly as you'd like to be in terms of how you engage in the neighborhood, but you've got privacy. Happiness, most people believe still that this is the American dream and the pride of ownership of having your own home. So that's a big wow. Roots, you're becoming a resident and becoming a bigger part of not only owning real estate, but you're now also part of a town and a community on a much more global level. Education, I found this one very interesting, and I thought I would share with you, is that they actually have done a study, and they've shown that children of homeowners tended to actually earn higher scores and actually graduate at a higher level. So I thought I would share that one. I thought it was interesting. Tax deductions, there are tax deductions for property taxes. Of course, there are some limitations on that, and also there can be some tax deductions on mortgage interest, and again, there are certain rules that apply with that. You are building equity. which is that your investment up front is you're getting a return on your investment and you're building equity so that you own something, and appreciation. And what that means is that over time, the value of your home is going to increase. And so you may have bought it at $400,000, but depending upon your length of time in the home, you could end up seeing yourself in 10, 15 years, whatever that number is, at actually getting a higher value for your home. That $400,000 home may become a $500,000 home, depending upon the market and what's happening out there and other real estate around you. So that's the high level of pros and cons. What I'm going to do next is turn this over to Stephen, because we really want to share some numbers with you so you have a better appreciation of the costs that go into renting versus buying, to help you move down the road as to what would make sense for you.
Okay, so in this example, and it is a little bit granular, we did use a comparison of 10 years. So, and the reason for that is, most mortgages will last about 10 years, whether you had sold a home and purchased a new one or refinanced the original property. So we used a 10-year gauge there. So, the one main thing is that when you're renting, on average, you're going to see rent increases annually of roughly about 2.5%, as you'll see in that left column there. And then here's some factors that we use that, you're going to have you should definitely have renter's insurance if you are renting. But we did use this example with a $400,000 price range, with a 20% down payment, which would give you a $320,000 loan amount. But if it's a 30-year term mortgage at 3.5% interest rate, and then you can kind of see your closing costs and your property taxes, homeowners insurance, which would give you roughly a monthly payment around $21.86, and you'll see the average monthly payment for rent, because it does increase over time. On average, it's going to be about $28.20 a month. So you'll see the difference because the principal and interest on the mortgage always stays the same, and rent increases. You can kind of see that difference there. And then also, as the home appreciates over that time, you are building that equity and also paying down the balance on the mortgage as well. So between the rent savings, as you can see, our rent savings is about $634 a month. Over that 10-year period. So, over that 10-year period, you would have built roughly about $197,000 worth of equity and saved about $76,000 in rent. So, total, you have a combined gain of about $273,000. So you can certainly see that there is a greater benefit to purchasing a home, and everyone's situation is going to be a little bit different. So please reach out to us, and we can go over your individual situation, and see what makes sense for you and what you're when you're ready to move, and if it's right for you and if you can afford it. And also, like I said, most importantly, just making sure that you're comfortable with whatever decision you make, and be able to make an educated one and not an emotional one. So I will pass it off to Kathy.
So I think we know the answer to this question is question 2, are you a first-time home buyer? And so based on the earlier question that we asked, I know we have a lot of renters on there considering wanting to look into the opportunity to buy a home, and those that are ready to move out of the house and perhaps make their own purchase, or perhaps begin leasing, which are certainly opportunities on both sides on it, and we certainly support and help that. So
yeah, and I will actually, there is a big misconception there with what a first-time home buyer is. So I will give you the definition. But if you haven't owned a home in the past 3 years, you are considered a first-time home buyer again. So if you had purchased a home and then sold it, and there was a 3-year period in between, you are considered a first-time home buyer again. Or sometimes there's special situations where you had purchased a home with a spouse, and had divorced from that spouse, and now you're on your own again, you can be considered a first-time home buyer at that point again as well. So another one of the bigger misconceptions in buying a house is that you need to put 20% down, and that is not true at all. We do have some very creative programs to allow you to, purchase a home with little money down, but then still kind of, keeping a healthy a payment as well. So there are some advantages to these first-time buyer programs. One of them is through Fannie Mae and Freddie Mac, which are conventional products, and you can put down a minimum of 3%, and it really depends on the location of the property and what the median area income is for that property. There are some income restrictions there. But if you fall under that, then you can use these programs. FHA, that's also another misconception. People think that you have to be a first-time homebuyer to use an FHA loan, which will allow you to put 3.5% down. Anyone can use an FHA product as long as it's going to be your primary residence. And you can do, like I said, put 3.5% down there. And then also there's going to be closing costs as well, which on average, throughout the country, we're looking at about, 3 to 3.5%. And that kind of depending on property taxes and things of that nature, that will affect what your total, cash to close is. So between what your down payment and your closing costs, how much you're going to have to come up with for the initial investment.
Thanks, Stephen. Okay, so hopefully by now the wheels are starting to turn and you're starting to put some thought into, what is my opportunity this year and what direction do I want to go into? And part of the conversation that we need to have and that you need to figure out is, how do I find the right home, and what is the recipe, and what are the components that I need to think about as I figure out what my dream home should be like. And that dream home can be a forever home, or it may be your first home that you're buying because your life is going to be an evolution. So just like when you're cooking or baking, there's a recipe. And so what this first slide is illustrating is, first of all, what's the type of home you're going to be interested in? Are you looking at a single family home, a town home, a condo? What's the condition of the home? Where is it located? What's my budget? What's the price of it? These are all key factors in finding your dream home. So I want to go a little deeper on this so that you have additional things to think about, because this actually becomes a homework assignment for you and for anyone else who would be involved in the buying process. So let's start with kind of types of homes. So on types of homes, what we have are single family. It could be multiple family. If you're looking to buy a 2-family, the opportunity there is you're living in one of the, parts of the house, and you're actually then getting income rental on the other part of the house. That can be a very lucrative way to be a first-time home buyer. A condominium, you may not be ready to take on that maintenance and the ownership of a full single-family home. Or a townhome. And a condominium, the big difference there, I would say, is that with a condominium, you basically are, there could be people above you, there could be people below you. When you're in a townhome, you really are, you're kind of like as what you could consider a single family attached, meaning that you've got like multiple floors that you are owning. The size of the home and what you're looking to do. It may be small right now because you're moving out for the first time. It may just be you. It could be you and a partner or a spouse, or you may have a family. And that family could be your immediate family, whether you have children, or it could be that you actually need to find a home where you are having parents move in with you, or grandparents move in with you. So these are all decisions that you have to think about. It could be in your life that you need to downsize. The house is too big now. Right sizing, that's a term that more and more we hear because people are realizing that, they want the right space. They don't need, this is like Goldilocks and the Three Bears. They don't necessarily need it too big. They don't want it too small, but they want to make sure that they have the right space to have a great lifestyle. And, what are the features, which is some of that becomes the fun part of this is, do you like open layout? Would you prefer to have separate rooms like a formal dining room? How many bedrooms do you need? How many bathrooms do you need? What's the property size? Do you want a fenced in yard? What are the amenities? Do you need a garage or 2 garages? Is a pool important to you? All these things go into considering what the right home is for you. Location, very important question. You know, you can define what type of home you want, but then you have to say, where do I want to live? And is that, you know, am I more comfortable in an urban environment or a suburban environment? You know, do I need to worry about proximity to school or house of worship? Am I okay on a busy street, or do I want a quiet street? Commuting time, we all have to factor that in. What's our threshold for how long we want to be in the car or on the bus or on the train or on our bicycle commuting to school or to work? How important is it to have access to highways and or public transportation? Condition. So, you know, there can be new construction. It could be move-in ready. That's important to you. You don't really want to have to do a thing. Cosmetic changes, meaning that the house is fine or the apartment is fine, condo is fine, but the paint has to be done to your painting. You know, you want to put a new faucet in, those types of things. Or you really like Fixer Upper. You watch HD TV all the time and you want to be able to really renovate this home. That all are things that are personal choices. And then the last component, and it's a very important component, is price and what you can afford. And you have to think about, and you'll work with your lender to determine how much you can afford of a house, what type of down payment makes sense for you, and what interest rates are, and based on the package that is available to you, what that looks like so that you're comfortable. It's really important that when you're looking at this, that you feel like you are able to enjoy and live in your house versus living for your house. Meaning if you have to work, you know, 24 hours a day to support that house, perhaps, you know, today is not the right time. And those are all conversations that we would have together to guide you into what would be the right time and some of the right decisions to make. Okay, I'm going to turn it back over to Stephen so he can talk to you about types of loans that are available out there.
All right, so there are a lot of different types of loans that are available, and we'll start off with a conventional mortgage. It's your regular standard mortgage. You also have FHA, which is a government insured loan. So if you may have less than perfect credit, or maybe you're carrying a little bit more debt than the average person, you know, there's some flexibility there for FHA. VA, so if you're a veteran, there are special programs out there for veterans or a spouse of a veteran, where you can actually finance up to 100% of the purchase price, as well with USDA. So USDA is essentially like a rural loan, where, you know, you're not really going to find it too much around here, but if you, as you start going out like really deeper into West Milford and areas like that, you might find a property that is eligible there. And then also a portfolio product. So a portfolio product, they're kind of the outside of the box type of loan program. So whether you're a you know, a self-employed borrower that, you know, maybe you do have a very good amount of cash flow in your business, but you don't necessarily show that as much on paper. It's more of a common sense lending. You know, if you've had any type of major credit events in the past, you know, if you want to do some type of investments, whether that's, you know, a fix and flip or or have a bunch of rental properties, there are some outside the box programs there as well. So if, you know, essentially, if you have questions, just reach out to us. Everyone's situation is different, and there's a lot of things out there that people don't know about. So, you know, whether you think you're ready or not, at least reach out to us, have the conversation, and see what is out there and available to you.
So what I want to take a few moments on is just the buying process itself. And I won't go into too deep of a dive, but for you to understand. So the way it works is we're going to start up at the top, and that starts with a buyer agent consultation. And this is where you meet with the agent and to understand, and it's the agent's job to ask you a lot of questions so that we really get down to what are your needs, because you become the most important thing when it comes to an agent and how they can help you get the home that you're, or condo or townhouse that you're looking to. Pre-approval. Steve is going to talk a little bit about that, a little bit more detail shortly, but it's very important that you end up understanding what your budget is and that how much you are pre-approved for, because when you're ready to make an offer, you want to have that pre-approval in place so that you are ready and able to make that offer. Previewing homes. This becomes the fun part. You might have done some research online. Your agent is going to be the one that's going to really help you move that along very nicely based on the needs analysis that you've gone through. And an agent has access to the multiple listing service. So we have the most access to the homes that are out there with the most current inventory. Not all sites are the same. Some of them can be a little dusty. Your agent has the most current information. Once you've found that home that you're interested in, the next part of the process is making an offer and negotiating. And you work very closely with your agent to do that. Once that offer is accepted, congratulations. We go into what's called under contract, and you may have seen those signs as you drive around that a property has gone under contract. And during this time, this is where you are working closely with your mortgage lender, because you're working on the mortgage commitment. And also the home inspection is performed, and there's an appraisal of the house that is done. And then lastly, when all of that comes together, it's closing day. And closing day is very exciting, because at that point in time, we are actually transferring funds, and we are transferring ownership of the current seller over to you as the current homeowner. And that's where the attorneys and the title company get together, and that typically you would attend to have that moment as a new homeowner.
And I think I'd like to circle back a little bit there too. After you spoke about the buyer consultation, a lot of people do start most people, I feel, start their home search online. And like Kathi said, they're not always accurate. Sites like Zillow, Trulia, they are aggregate websites, which means they are there for marketing, and the information isn't always super accurate and correct. And they also will sometimes estimate a monthly payment, and they're not always, properly factoring in, property taxes, homeowners insurance. If they are, it's on an average. It's not specific to the, the area or price range that you're looking in. So, take that, into consideration when you are looking at homes online. I really think it's important to sit down with an agent and a lender before you try to do that, because, I kind of give the example as, when you go look to buy a car, the first thing they do when you get to the dealership is they want to get you in that car that you like, have you test drive it, fall in love with it emotionally, and then you find out what the monthly payment's going to be. And at that point, you are now making an emotional decision instead of an educated one. But the thing is, when you're leasing a car, you're making a 3-year commitment, not a 10, 15, 20, 30-year commitment. So there's definitely needs to be a lot of thought that goes into this. And so we'll kind of get into the importance. That's definitely one of the main things is importance of getting pre-approved before you really start searching for homes. And also, right, we're going to look at credit is one of the first things that we look at, and sometimes people have things that are on their credit report that aren't at 100% accurate, and sometimes it does take some time to get those things corrected. So we want to kind of get an early head start there. And usually an agent, they may meet you once and take you out to see a house or two, but if you're not pre-qualified, they're not going to take their Saturday and Sunday and take you to see 20 or 30 houses if they don't know you're qualified. And also you don't want to waste your time as well, right? Everyone's time is important, and especially in today where you usually have 2 incomes in a household, and everyone's working that time on the weekends, and that time with your family is very important, and you don't want to waste any of it. So I will kind of go into what we're looking at when we do pre-approve you. So the first thing, like I said, we look at is your credit history. We're going to go over your credit report with you and make sure that there's no inaccuracies there and that you're aware of everything that is on your report. We are also going to review your income. So we're going to take a look at your work history, how much you're earning, whether that's a salary, an hourly pay, if you're, work a certain amount of hours a week, if you're doing overtime or you get bonuses. We're going to look at a history there and do our calculations to see how much of that income we can use. Especially if you're self-employed, we're looking at tax returns and things like that. And then the third thing is your assets. So credit, income, assets. So when we look at your assets, we're going to make sure that you do have enough for the down payment and closing costs, and then also, looking to have a decent safety net. Once you have closed on that home, we do, like we said, there's some maintenance that can be done. You may have a sudden change or unplanned changes in your life that can happen. So we always want to have somewhat of a safety net and a cushion to kind of help us if there is a tough time. So it's not always required, but it's something that, I like to advise my clients to do. So when we look at credit, you're looking at a chart that will kind of give you an idea of what your credit score is made up of. So the most important thing and the biggest percentage is your payment history. So making sure that your payments are on time is a huge factor in your credit score. How much you owe. So on your, what we would call revolving accounts like credit cards and things like that, we're going to look at the utilization on those cards and seeing how responsible you're being. So let's just say, for a round number, your credit card, you're available, your max is $1,000, and we're going to look at how much of that is available. So you want to try to keep your balances on your credit cards at around 30% or less, and even 10% or less is probably get you the best score. So if you have $1,000 credit card, you want to try to keep those balances at $300 or less. So the utilization on those cards is going to make up a big factor of your score as well. New credit. So if you're constantly making new purchases, whether that's a car or any other item that maybe depreciates in value. And so then we're going to look at the length of credit history that you've had, right? So big thing is, a lot of people will pay for a credit card and then close out the account. And what that does is that erases the history of that card. And so it will actually hurt your credit more than it will benefit you. So if you have things that you've had for a while you haven't used, it's okay to keep them open. And then we're also going to look at the mix of credit. So, we want to see a good mixture of credit. So you want to have balance. So let's say you have a mortgage payment, an auto loan, and one credit card. That would be balanced. If you're in your family, you have 2 cars, maybe you have 2 credit cards. So we want to see a good balance there. If you have 20 credit cards, that's really not a great mix of credit, and that can negatively affect you as well. So the most important thing about this whole entire process is making sure that you're working with the proper team and they are communicating with each other throughout the transaction, so that when you sit down with me, I know how much house you need, and then we kind of want to balance in between where you're comfortable and making sure that the partners that you're working with are having good communication, so that your realtor is not showing you things outside of your comfort range, and constantly communicating with your lender, because we may say, okay, well, you might be comfortable in a $350,000 price range, but one property in one location may have a higher payment than another because of the property taxes. So if you're out looking at $350,000 homes, and in one area the property taxes are $7,000, another area the property taxes are $10,000, that can make up a big difference. So making sure that you're constantly communicating, with your partners and making sure that everyone is on the same page. And then you're going to have some other people involved in the transaction as well. Your home inspector, you're probably going to just deal with him once or twice when he does the home inspection and then provides you with the report. I would highly recommend that you are present for that home inspection, and making sure that you're asking the questions, and he or she is going to go through the house with you and let you know of any type of safety issues that should be corrected, or just things to keep in mind, which is really important. because that'll kind of give you an idea of the condition of the property and what maintenance may be coming up, or how long, is the roof brand new, is the roof 10 years old, 20 years old. So that can kind of, you can factor that in with your comfort level as well, and also, like we talked about, having the reserves too. If you know that you're going to need to replace your roof soon, then maybe you want to have a little bit more of a safety net than you originally thought. You're going to be dealing with a title company, and they will making sure that that title from that property is being transferred over to you clean, and that no one else can claim ownership to that property. There's also insurance for that as well that's required. And then you're going to have homeowners insurance. There's a couple different types of policies, whether that's for a condo or a single family residence. There's different policies there. The primary single family residence is going to be a little bit higher cost monthly on the insurance than a condo, because on a condo you pay maintenance dues, and everything outside of the walls is the association's responsibility. So you're just responsible from the walls in. So that policy payment might be a little cheaper, but it is kind of sometimes does get offset by those maintenance fees. And I think a really key factor here is don't reach out to listing agents to go see a property. You're going to go there? Okay. Yeah. All right. So I'm going to switch over to Kathy at this point, and she's going to take over.
Thanks, Stephen. So just one last comment on this slide, and as Steve did a very nice job taking us through the key partnership, you're going to notice on the slide that the buyer agent, the mortgage lender, and the buyer are in green, because these really represent, this is the primary relationship. And as a consultant, I'm here to help you in terms of guiding you. And while this seems like a lot, what happens is as an agent, I'm there with you every step of the process. And my job is to help you anticipate what's coming next, so that it becomes a true partnership, and I'm really there to guide you, as Steve, as a lender, would be also. And so I just want to reinforce that, because I know this is a lot to absorb. But what happens is you really have great resource available to you, and we have the ability that we have preferred vendors. And these vendors are actually people that we feel very comfortable that they will help us get the job done and get you to a smooth closing. Just want to reinforce a few things in terms of why would you need a buyer agent to represent you. So we've already talked about needs analysis, and it's really important for that consultation to understand what your needs are, and the person is solely working for you. We represent your best interest, and so as Steve said, and he's absolutely right, there are people that say to me, I'm going to go work with a listing agent, and because they think they're going to get the best deal by going to the agent that's listing the property. So, here's what I would ask you is, if you were getting sued by someone, or perhaps unfortunately you were going through a divorce, would you end up using the same lawyer? And would you end up using the same people to represent you? And the answer, 99 out of 100 times, are going to be no. And that's because you want someone who has your best interest and is solely working for you, so that I can negotiate for you and represent you, saving you time, recommending professionals. We've talked about that. And the services are free, because it's the seller's responsibility for the buyer agent to pay the buyer's commission. Steve.
All righty. So, and we kind of did go over this briefly, making sure that we're going over what your needs are, and kind of looking at, like I said, where you're at in your life, where you're at in your career, making sure that we are putting you in the best situation for your current situation. A good lender understands the product and the guidelines. They are constantly changing, and you need someone that stays up to date on all that stuff. And like we touched on before, having a really good communication with your team, and making sure that we always have your best interest in mind. So I always try to take that advisory role when I'm working with a client. I want to be your advisor for life. So it's not a transactional thing where we close and you never talk to me again. I will constantly follow up with you, see if things are okay. we want to be the source for your information. So, whether you need a referral for another professional, whether that's an accountant or a moving company or a contractor or an electrician, anything like that, any type of needs that you may have, during your home time being a homeowner, we always want you to reach back out to us and take our advice and kind of be able to continue to guide you in the right direction, for a very long time. So it's more of a partnership to us. We really truly care about each individual client, and I personally like to treat everyone like they're my family members. Actually just did refinance for my mom, so she's happy.
Mm-hmm.
Okay, so I know we only have a few minutes left and time together. We do appreciate your time. Hopefully, at this point, we've given you some things to think about. And if you want to go ahead and answer the question, or you're thinking about buying in 2020, please type it into the question section. I do want to get to when is it the right time to start planning, and I'm going to have Steve take you through that.
Yeah, so we talk about 12 months because you want to be prepared, but there's really no time too soon to reach out and just have a conversation. Just to, we're always here to answer your questions. I do make myself available on the nights and weekends because I know, people do have busy schedules, and I do pride myself on being available to you. And like we kind of said before, right? Sometimes there are errors on credit reports, and sometimes there are some, slight changes that we can make to improve your credit score in a short period of time, to maybe help you get some better terms or help you qualify. Where else?
I just want to tell you guys that people are writing in yes, yes, yes. A lot of people are thinking of buying in 2020. So these are good tips. These are good tips for them to start doing right now.
That's great.
All right. So a couple of kind of do's and don'ts to when you're getting ready to purchase a home, and we'll start with the don'ts. Try not to take out any new loans. And you can constantly contact me. Look, if you had a car accident and you need to purchase a new car, it's big purchases like that can affect you, but reach out to me directly and we can kind of go over that situation. As we spoke about before, we want to try to keep the utilization on our credit cards fairly low, and making sure that our payments are on time. Changing jobs, it's okay to change jobs. It just becomes an issue if the structure of your pay or your career, or if you're making a career change, where that can kind of slow you down a little bit, because we are going to look at a 2-year work history, and because we are speaking to a college, I will elaborate a little bit there. If you are a professional, and like, let's say you're a teacher, doctor, lawyer, you went to school, you got a degree for a certain line of work, and you are now in that line of work for 6 months, we can use your schooling as work history. So just because you've only been at your job 6 months doesn't necessarily mean that you cannot purchase a home. But I would recommend at least 6 months, because you want to make sure that everything is stable before you decide to make a commitment. And spending your savings, right? So I would say, if we have a conversation and we give you a ballpark idea of what the monthly payment's going to look like, what I would do is I would try to save that monthly payment every month, just so you can kind of get used to making that payment, put that in a savings account, and don't touch it. And then, it will allow you to have some extra cushion when you do decide to purchase. So like I said before, making some adjustments in the credit profile, if you do have some high balances, and we can kind of run some scenarios. We have some tools to look at that, where we can run a scenario and say, okay, if you pay this credit card down to this balance and get us a receipt, we work directly with the bureaus, and we can actually do what's called a rapid rescore, and actually improve your credit score and force that creditor to update that credit report within about a week, instead of having to wait 30 or 45 days for that creditor to actually report that. Or sometimes you may have negative things on your credit report that either aren't true, or we do sometimes have the ability to remove things like that. That's not something I do personally. I do work with a bunch of professional credit specialists that that specialize in that kind of stuff. And I've had some really good success with the company that I do use. My company's been using them for about 15 years now, and they're always getting really good results for me. I had just sent them a client a few months ago, and they were actually able to remove about 3 different late payment and collection charges that were on that credit report, and we were able to get their credit score up about 70 points, which really got them a lot better terms on the mortgage itself. So that credit is a very, very big driver of everything, and it's going to affect everything in your life. There are some insurance, auto insurance companies that won't actually cover you, if your credit is not decent. So, it's having a lower credit score is going to cost you money over time. And so we want to get you in the best position possible. And, finding the right home for yourself, that's really important, because you are making a long-term commitment. It's not like renting an apartment where if you don't like it next year, you can just move super quickly. So making sure that you're making the right decisions there, and trying to save as much money as you can, as we spoke about. Try to put aside that mortgage payment every month, and just see how that feels.
I know people are starting to have to leave because it's their lunchtime. Yeah. So if you have contact information, Kathy and Stephen, and if I could just ask a few questions, that would be great, if you wouldn't mind.
Absolutely.
These people are still on. One question was about closing costs. Does everyone pay closing costs when buying? And this person will be buying for the first time. Everyone pays?
Yes,
okay.
You do. Correct. Like we talked about, there are some loans where there's 100% financing, but you do need to pay the closing costs out of pocket. And unless it's a refinance, you can't do it on a purchase, but on a refinance, if there's enough equity in the home, then we can cover those closing costs, so you have no out-of-pocket expense.
Oh, great. And then I just want to say, one person said it's probably worth mentioning that real estate laws do vary from state to state, because we have people on here who might be from other states in New Jersey. So just to let people know that.
That's absolutely correct.
Okay.
And that's why it's very important, whether you've bought before or not, to go through the process with your agent, and also with the attorney that you choose, so that you really understand the process to make the right decisions.
Okay. And this person wants to know, is it true that homes are sold at a higher price sometimes than the listing price? And I think, yeah, that's probably true, right?
Yes, that can be true. It depends upon what's happening. Sometimes you have a home that is very desirable, and what will happen is that you'll have multiple offers. And so it's based on the seller who will decide whether the highest price wins, but it's not always the highest price. There are a lot of different factors, so it's based on an individual situation. But yes, it is true.
Okay. Now this is a 2-part. What are some red flags to look for when dealing with an agent, I guess? And also, what are some of the pros and cons of purchasing in New Jersey versus other states? That could be an answer that would last forever, but.
Sure. So, I think the thing is that the first thing I'd say is that, first of all, this is a people's business, and it's how do you feel working with that agent, and how comfortable does it feel? Because this person during this process becomes one of your best friends, and your confidant on many things. So having that, if it doesn't feel right, it probably isn't right as far as a relationship. You're also looking for someone who's really cares about you and is really asking you questions versus you telling everything. My job isn't to buy the home that I want you to buy. My home is to help you buy the home that you want to buy. And so really a person who's listening to you, understanding you, and delivering and fine-tuning what they're providing you is very, very important to it. So those would be the couple of, things that I would say are key in deciding an agent to work with. I also would say to you, as far as the other question in terms of states, that's a very big question. And there's a lot of different components to that. So I think it's something we'll have to take offline, and perhaps, Sharon, if you want, we can, put together an answer and give that to you to share with the person or people.
Too. Anyone who's on here, Stephen and Kathy, would you be, if they have your number here, they have your email, can they reach out to you if they have a question or want to get in touch with you? You're good with that, right?
Absolutely. Absolutely.
Yeah. So if anybody has a question, please feel free to reach out, especially, knowing that it's best to get pre-approved. Stephen is your guy. And then, looking, and somebody is just asking now, is it better to save till they have 20% down payment or not? Well, you went.
It really depends on their specific situation. Sometimes there can be a cost of waiting, where the home prices are increasing, and, the fact that interest rates are at an all-time low right now, we can turn around and next year interest rates can be right back at 5% where they were, this time, right around this time last year. So sometimes waiting to have 20% down, there can be a cost to it as well. You do get sometimes you do get better terms when you do put more down, but sometimes, in the long run, like we talked about paying rent and the rent increases, there can be a cost there to waiting. So like I said, we do have some pretty creative ways to get you into a home where, you can have a low down payment and still a comfortable monthly payment.
Okay.
As well.
Now, we're way over time, but I just want to end with this last question because it's very appropriate, because we are a university. Are school loans a huge factor in the debt to income ratio?
Very much so. Yes.
Okay.
They are.
Okay.
And it really depends on how they're structured and which kind of which kind of loan program you're using. Certain loan programs are a little bit more forgivable than others with in respect to student loans, but yes, that is definitely a big factor.
Okay, so I'm going to end this now, but please, everybody who's still here, a lot of you, take down this information. We have been recording the session, so we're going to put it on our YouTube channel as usual, and we will get a copy of this deck. Yes, if we can email a PDF to everybody, because there was some really good information on there, and yes, we can send that out to you along with the link so you can review it. Please feel free to reach out to Kathy or Stephen if you have any more questions, or if you're looking to buy, because I saw a lot of you are looking to buy this year, and it's a good year with the interest rates down. So, and thank you, Kathy. Thank you, Stephen, for doing this. It was really good information, and that's it. So,
thank you, Sharon, so much, and thank you all for being on the call today. And I hope we did at least make you think and provided you with some information for you to make the right decision in 2020. Thanks, everyone. Have a great day.
Thank you.
Everyone. Bye.
All right. Bye-bye.